Hey, most traders won't tell you this, but I've lost $19,000 in seconds, blew up funded accounts, and destroyed my health. And of course, I fell for every scam in trading. My journey hasn't been perfect. If you have ever felt like giving up, you're not alone. In this video, I'm sharing everything about me, including how I turned these failures into a systematic approach to trading and personal growth. For those that do not know me, I'm Keeley. I started this channel to share my journey, as well as to share what I've learned with an audience that resonates with me. Why should you trust me or care who I am? I'm like you in many aspects. I'm not a guru. I'm just an average white-collar worker working in a 9-to-5. I graduated from a local university and started out as an auditor for 3 years. I was hospitalized from overworking in my 3rd year, and it struck me that I don't want to participate in the rat race. So I left the audit industry shortly after a while and started my role as a fund administrator, and I'm still currently in this role. Like many of you watching, I started my journey with a dream. Back in 2012, I was captivated by the idea of trading. You know the scene where the guru flashing their Lamborghinis, their private jet, promising the get rich quick lifestyle. Not going to lie, it was tempting for the young me back then. So in 2012, a buddy of mine dragged me to a free trading seminar. You know the drill, where they try to upsell you the paid course at the end. I did not sign up because I didn't have the money back then. So I went to borrow books from the library, made a lot of notes, and tested multiple indicators. So I started out with price action strategy, drawing Fibonacci harmonics pattern, and using indicators like MACD, RSI, Bollinger Band. But here's the catch. I thought that I'd found the holy grail when trades worked out, but my inconsistency proved otherwise. I lacked the capital, confidence, which pushed me to explore other avenues. I talked about why I stopped using indicator in this video here. Eventually, I moved on to expert advisors or trading bots, testing them on small accounts. These accounts burned out pretty quickly because I didn't have the motivation or knowledge to learn the system properly. And of course, most of them are employing the martingale strategy, which blows up the account pretty fast. And so that led me to quit trading for a while. And this is the first time that I quit trading. It was towards the end of my 2nd year in audit when I decided to revisit trading again. So a colleague of mine introduced me to copy trading and PAMM investment. For those unfamiliar, PAMM investments allows investor to allocate funds to fund manager in exchange for a share of profits. So I researched managers with consistent track records and invested my savings. Things went well initially, and I was compounding my profits. My $19,000, $292 had dropped to just $8. I panicked, thinking it was an error, but I soon realized the fund manager actually risked everything in one trade, wiping out the entire account. I stared at my screen, shaking. $19,000, which was my entire life saving, gone just like that. For weeks, I couldn't sleep. And worse, I discovered that the broker had fabricated performance reports relating to this rug pull scam. This painful loss taught me a critical lesson. If it seems too good to be true, it probably is. Feeling devastated, I quit trading once again. Here's the lesson nobody tells you. If someone's selling you a passive income, they are not. They are selling you. After my PAMM disaster, I explored other side hustle. Dropshipping, customizable watches, Amazon FBA, and Fiverr consulting. Each hustle came with steep competition, and I lacked the patience to build them up. This frustration made me reflect. If everything is hard at the start, then why not focus on something infinitely scalable? And trading stood out most because it doesn't require any customers or scaling effort. A 1% gain on a $100 and a $10,000 account requires the same output. So I returned to trading. I joined my first mentorship, which focused on supply and demand. While I found some success on higher time frames, it didn't suit my need for action. Trades on the 4-hour and daily charts moved too slowly. I tried applying the strategy to lower time frames, but I couldn't achieve profitability. That's when I found a mentor who taught Wyckoff and price action. Unlike others, he simplified the complex concept and introduced me to trading on the seconds chart. This approach resonated with me. After 5 months of learning and backtesting, I started passing prop firm challenges and earning consistent payouts. I also documented my journey in my Discord server and my previous YouTube channel, where I documented 20 weeks of journey to me passing the challenge and getting a payouts. While at the same time, I researched my long-term investments and built a strong convictions in stocks like Palantir, which has since yielded significant results. Now, just when things seemed perfect and I was planning to already quit my full-time job, the market humbled me once again. I started failing prop firm challenges, lost funded accounts, and even some prop firms shut down entirely. This time, I didn't quit. Instead, I focused on understanding trading psychology. Winning trades made me overconfident, leading to poor risk management and impulsive decisions. Recognizing these patterns, I took a step back to re-evaluate my approach. Here's another crucial lesson. Trading isn't about being right every time. It's about understanding that any single trade is just one part of a larger statistical framework. This also slowly shifted my mindset and transformed my trading psychology and approach to risk management. Determined to make trading work once again, I joined another mentorship program whereby the mentor showed real results and how his trading week really looks like. I was sold and committed to mastering my craft once again. Over here, I collected over 3,000 backtested data points and focused on probabilities over large sample sizes. I talk about the importance of recording your trade here in this video. If you want a free trading journal, check out the link in the description. So, how do you pick a mentor? For me, I look at what they stand for, do research on what they are posting online, if they do any clickbait contents that promotes get-rich-quick schemes. A rule of thumb, find someone that you resonate with. If they promise 100% win rate or guaranteed that a beginner will get funded and get 5 figures worth of payout in 1 month, they are probably too good to be true. It will be better if they have real track record. This should be verified, and they should not be using white-labeled brokers that can fabricate their live results. From here, I also learned how to avoid blowing my personal account. Right now, I'm risking no more than 2% per trade, and I'm okay with a string of losses. It doesn't matter to me because I understand that I'm here for the long term. Today, I'm still working my 9-to-5 job while managing prop firm capitals and building my private fund. The lesson from my hospitalization taught me the importance of balance and sustainability. Having a stable job provides a safety net, allowing me to trade without the pressure of needing immediate profitability. This balance helps me stay focused and consistent. This is when time management comes into play. I know you're drained after your 9-to-5. I was too. I talk about how to trade while having a 9-to-5 job in this video here. This journey isn't about trading, it's about personal development. Every failure and setback has been a stepping stone for growth. Failing small and early taught me invaluable lessons, and I hope to help others avoid the same mistakes. Remember, success isn't about avoiding failures, it's about learning fast and adapting. Would you rather lose $1,000 now while you're young, or $50,000 when you're older and have more at stake? Okay, so right now I'll go through my trading strategy, which is mostly using the concepts learned in MentFX. So if you're interested in learning the in-depth of how I trade, how we trade, do check out the link in the description, right? And I'm currently still under his mentorship, so yep. He'll be the one that's better in teaching this stuff. So a rough idea of how I trade right now. It's not exactly how he trades, but it's very similar. Okay, so it's basically we use multi-time frame analysis, and we are focused on trending market. Okay, so let's move on to the higher time frame first. So if you can see, we want to trade where the smart money are entering the market. So if you can see on a higher time frame over here, we have clear established bullish trend over here. You can see higher high, higher low, higher high, higher low, higher high, higher low, and we're expecting a higher high, right? So we established that there's strong impulse, right, pushing the price higher, and of course price is trending. So when this is established, then we can go down to the middle time frame, where it's similar to higher time frame. So the middle time frame and the higher time frame works in tandem. So they basically look for the same thing, right? So a big impulse up, right? MAs are all showing price is heading higher, right? We have a higher high, higher low, higher high, higher low, right? So on the middle time frame, we're waiting for a pause after the big impulse. So you can see over here, I labeled 1. So when price move higher, during this pause, we're expecting a lower low to form here. So when a lower low is formed, the next leg we are expecting is a higher high, right? Higher low over here, right? So when price started to pause over here, we will drop down to our lower time frame, right, to find our entry model. So it is quite straightforward. We just want to see a flush, right? A flush below, most preferably, right, below the MAs, right, and a reclaim of the MA, and the first demand after reclaiming the MA. So for me, I treat a demand as a candle with swing high, right? Then the supply is a candle with a swing low. So a swing high is basically the candle over here, whereby the candles beside this candle, right, has a lower high, right, as compared to this. So what we do is to basically set a buy stop over here and wait for price to take us higher. Okay, so this is one example. Then let me just go through another example, because it's basically the same thing on repeat, right? Over here. Okay, so as you can see, price is showing extremely bullish sentiment over here. So a big push up, right? High high, high low, high high, high low, high high, high low, higher high. So over here we can see that the higher time frame has the bullish bias being established. So we want to get in long, right? So on the middle time frame here, the same as what I mentioned earlier. So we have this higher high, higher low, higher high, higher low, uptrend. MAs are all pointing up, sloping up, telling us that, hey, there's money coming into this market. So I want to get behind this move. So over here you can see price move up and created this pause. So this pause is representing a higher low, in which if it is a trending market, then we are expecting a higher high next, right? So when this pause actually happened over here, we go down to a lower time frame to look for our entry model, right? So for our entry model over here, you can see, let me zoom in a bit. Okay, so we have this flush below the MA, right? A flush, and if you are familiar with the concept of liquidity sweep, then we have this lows, which there's a liquidity sweep right here, and reclaim of MA, right? So if you remember, after reclaiming an MA, I'm looking for a demand with a swing high. So over here we have a swing high, which created a demand after reclaiming of MA. So I set a buy stop over here, stop loss, protecting whichever lows that I want, right? Usually between 1 to 2 times of ATR, right? So price stepped me in, didn't take me out, and proceeded to run. Okay, so this is something that I do, right, to basically see what trades I should be taking. So I have all these screenshots being saved for my reference. Okay, So next, I'll go through one of the trade that I took this week, and I'll explain it using the concepts that I explained. Right. So what do I do here? Okay. Before we see the entry over here, on a higher time frame, what can we see? A strong bullish market, right? There's no doubt about it. This is definitely bullish. So we have a higher high, high low, higher high, high low, higher high. So we're expecting price to continue higher, right? When the trend comes, then we want to get behind the trend, and we should stick with the trend, right? Because trend is always your friend. So we have established that on a higher time frame. Then now moving on to the low middle time frame, whereby we have bullish bias established. So MAs are all pointing up too. We have this impulse and our first pause, right? What can you see? High, 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 low, high, high, low, high, 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 low. Expecting price to continue higher, right? So right here, I went down when price was coming down to the MAs. I go down to the lower time frame. Okay, so over here you can see okay, my MAs are not here, but never mind. So we flush, right? We created a flush. If I remember correctly, price came down below the MA, right? And we have a reclaim of MA. Then over here we have a demand being formed, right? A swing high with a lower highs on the side, and I set my buy stop over here. And so I got tapped in, right? Tapped in, then price went higher. Then on, I believe on this candle, I shifted my stop loss to break even already. So this trade is completely risk-free for me, right? So I waited for price to show insane strength. So over here, I actually, if I remember correctly, I waited a while before closing. Yeah, I think I closed here 50% of 50% at 5.2 Rs, right? So I secured 2.56 R in total, right? Because for this account, I'm trading on the 200k account, right? And for this particular pair, the margin usage was pretty high, so I wasn't able to risk my 1%, right? If not, I'll probably just closed more positions over here. And what happened was, after I closed 50% over here, I still have my 50% at break even. So why I do this is because we are still pretty early on this momentum cycle, whereby I'm expecting a push higher, basically 4 pushes higher, right? 1, 2, so probably two more of such impulse. So I was expecting price to continue high, even higher from here, and I was waiting for my management to take me out. So I was, after the first 50% partial taken, I was managing on the middle time frame over here. So price actually went higher, quite high. I think it's 7.57 R. Then with this candle, I was expecting a second pause over here, right? So we just show you high, high, low, high, high. I was expecting a higher low over here before continue higher. Okay, so that was my expectation, which was why I did not secure any more partials, and I was waiting for price to continue higher before I managed this position. And what you can see here is price then just collapse all the way to my stop loss. Yeah, so the maximum RR ran was 7.56 R, and I managed to take out 50% at 5 something R, right? So effectively, I only secured 2.56 R, right, for this trade. So this is the one and only trade that I took this week, because I was busy with something else. So it was pretty pretty chill week for me. And yes, and that is all for this week's trade recap. If you have ever felt overwhelmed by trading or wondered if it's worth continuing, know this. Every successful trader has faced similar struggles. The difference lies in how they responded. Drop a comment below sharing your biggest trading challenge. I read every comment and use them to create content tailored to your needs. Your journey is unique. Don't compare your chapter 1 to someone else's chapter 20. Focus on progress, not perfection. Hey, if you have enjoyed this video, then I'm sure you'll like this video where I talk about how I passed my funded challenge in 3 days.